Okay, let's dive in. For years, the business world had its own kind of mythical creature, the unicorn.
Right.
Not the, horse with a horn, but that privately held startup hitting $1 billion valuation. It felt huge.
It really did. There was so much fascination around it, how they even got there.
Exactly. And the term itself was meant to show just how rare that was.
Extremely rare.
So this deep dive, it's all about getting under the hood of what unicorn means today. We want to look past just the big number, the $1 billion.
Yeah. What actually defines these companies now? What's driving them?
And crucially, what does real lasting success look like? Is it just hitting that valuation? Probably not.
Probably not. And we've dug into a bunch of sources you shared for this. Notes, articles like Understanding the Modern Unicorn, Beyond Valuation.
Right.
Our goal here is to pull out the key things you need to understand about where things stand right now.
Okay, so let's start at the beginning. When the term first popped up.
Right, okay. 2013, Aileen Lee, a venture capitalist, she coined unicorn. And the whole point was hitting $1 billion while still private. That was just statistically, well, incredibly unlikely.
How unlikely are we talking? Like, what were the actual numbers back then?
Globally, get this, just 39 companies in the entire world.
Wow, okay, 39. That really puts it in perspective. It was almost mythical.
It absolutely was.
All right, now here's where the story takes a massive turn. Fast forward to today, or let's say September 2024, based on the sources. That number 39.
Oh, it's not even close. Not even 100, like you said before.
Well, what is it?
It's completely exploded. The global count now is over 1,400.
1,400.
Yep, over 1,400. Just think about that jump in roughly a decade.
That's staggering. So unicorns aren't this super rare thing anymore. They're, well, a whole category of companies.
It's a significant cohort, definitely. Less myth, more multitude, you could say.
So how did that happen? Going from 39 to over 1,400, what fueled this explosion?
Well, the sources point to a few big things happening together over the last 10, 12 years.
Okay.
One was just a huge increase in capital available. Lots more money looking for places to go, for high growth opportunities.
Right. More venture funding, private equity.
Exactly. And second, the market opportunities themselves just keep bigger, broader, more ways for companies to scale up really fast.
And there was also that tech angle mentioned in the readings, right? Something about a unicorn software power law. That sounded interesting.
Yeah, that was a fascinating point in one piece. The basic idea is that the pace of creating these software unicorns seems to follow the growth curve of computing power.
So as computers get faster and cheaper.
It basically creates a richer environment, makes it easier, faster, cheaper to build massive software companies. The underlying tech capability is a key enabler.
So it's not just money and markets. It's fundamentally tied to Moore's law or something like it.
Precisely. And you see this reflected in projections, too. Based on that idea, one source estimated, even with a more moderate, say, 15% year-over-year growth, we could hit around 1,400 U.S.-based software unicorns alone by 2033.
Wow. Okay.
So yeah, technological innovation is definitely flagged as a huge macro driver.
Okay, so the number of companies hitting that billion-dollar private valuation, undeniable growth, huge increase. But here's the kicker, the question the sources really push on. Does hitting that number actually mean the company is set for long-term success? Does it reflect solid business fundamentals?
And this is really the core tension, isn't it? The sources bring up a lot of skepticism from market watchers.
Yeah. What kind of skepticism?
Well, the argument is that these valuations, especially in the last few years, might be, well, inflated.
Inflated how?
Driven more by speculation, maybe,
Mm-hmm.
by projections of future greatness, hope for a massive IPO or acquisition, rather than what the company is actually earning or achieving now.
Right, based on current profitability or proven performance.
Exactly. Less on the here and now, more on the maybe later.
Yeah. And you can easily see how chasing that billion-dollar label could create some, let's say, skewed incentives for the companies themselves.
Absolutely. The pressure to grow fast, to hit that mark for the next funding round, it's intense.
So you prioritize things that look good on paper quickly.
Yeah, the sources suggest that. Maybe focusing heavily on, say, just acquiring users, even if they aren't profitable users, rather than the sometimes slower, harder work of building real, sustainable value.
Okay, so for you listening, this might be the most critical distinction the sources make. The difference between, what was it called? Perceived value.
Yes, perceived value, often what you see in that flashy funding round valuation.
Versus intrinsic sustainable value, the kind that great companies build over time.
Exactly. Hitting the milestone is one thing. Building an enduring, truly valuable business, That's another journey altogether. The sources are really clear on that distinction.
And it's important to remember the context, right? A lot of this unicorn boom happened during a very specific economic climate.
Oh, definitely. The sources constantly bring up the ZRP era zero interest rate policy.
Right. Basically, money was incredibly cheap for about a decade.
Yeah, historically low interest rates, tons of capital floating around, looking for any kind of return.
Hmm.
And according to the sources, that environment almost certainly fueled some of what one article called valuation hype.
Valuation hype. That sums it up pretty well. And it leads to another term that popped up in the readings, papercorns.
Ah, yes, papercorns. That's the label for companies that have these huge private valuations on paper.
But the actual proof is missing.
Kind of. The potential for a real successful exit, like a strong IPO,
Mhm.
or getting bought by another company at that valuation or higher, it's still unproven, or maybe even questionable.
So the valuation looks amazing in the spreadsheet, but the public market or an acquirer hasn't actually validated it with real money yet.
Precisely. And this is where the sources really urge caution. For founders, for investors, for anyone watching this space,
Caution about what specifically?
about chasing valuation just for the sake of the number. According to these analyses, that can be a really dangerous path. It might not lead to building a fundamentally sound business.
Which brings us to now, and looking ahead. We have this huge herd of unicorns, over 1,400 of them, potentially inflated by hype. What do the sources think happens next?
Well, a pretty strong theme coming through is the expectation of a thinning of the herd.
A thinning of the herd. Sounds Darwinian.
A little bit, yeah. The basic idea is that many companies currently called unicorns might not actually survive or won't sustain those high valuations in the long run.
So hitting the billion-dollar mark in that specific, maybe overheated funding climate doesn't guarantee survival.
Not at all. True corporate greatness, the sources seem to argue, requires much more than that.
So is this like a market correction playing out? Or maybe just a maturing of how people think about startups? Is the focus shifting?
It really looks that way. The
Mhm.
sources talk about a growing emphasis now on building a sustainable foundation, meaning focusing on things like solid unit economics, a clear path to profitability, growing efficiently, not just pursuing the glamour of unicorn status at any cost.
That old growth at all costs mantra seems to be getting a serious rethink then, especially if it was tied to chasing that unicorn label during the ZRP years.
Absolutely. One source even pointed out seeing capital efficiency metrics declining for some big enterprise unicorns, which suggests, just growing fast isn't the whole picture.
Right. You have to grow efficiently, sustainably.
Exactly. The sources are basically saying, okay, that phase was interesting, but now let's get back to basics. What actually builds a lasting company?
So if you're trying to build the next great company today, or if you're an investor looking for it, what's the new playbook according to these sources? What do these future unicorn builders need to show?
Well, it seems like they need to demonstrate both things now. Rapid expansion is still important, that potential for scale.
Uh,
But, crucially, they also need a really clear and believable path to actually making money and creating long-term value.
Believable being the key word.
Definitely. Not just hand-wavy projections, but a solid plan. It sounds like a much tougher test for the business model itself and for how well the company is run day to day. More operational discipline required.
Yeah, it feels like the bar is definitely being raised compared to maybe the peak hype years.
The sources suggest so. What defines a truly successful high-growth company seems to be evolving.
Okay, so for you listening, when you see that next headline, Startup XYZ reaches billion-dollar valuation, what does this all mean? How should you think about their real potential beyond just that number?
It means you got to dig a bit deeper, right? That valuation, it's a data point. It's a milestone achieved in the private market context.
But it's not the final grade.
Exactly. The sources are pretty united on this. It's far from the only thing that matters for long-term success, and maybe not even the most important thing.
Okay, let's just quickly stitch together the main takeaways from this deep dive then.
Sure. First, unicorns are way, way more common now than when the term was coined. That growth was powered by lots of capital, bigger markets, and definitely by technological progress like that compute power link.
Right. But, and this is the big but from the sources, hitting $1 billion in a private valuation doesn't automatically mean the company is built to last or has strong fundamentals underneath.
There's that critical difference between the perceived value in a funding round and the intrinsic sustainable value of the actual business. Very important distinction.
And third, it looks like the tide is turning. There's a growing focus now on building businesses that are resilient, profitable, sustainable, moving past that pure growth at all costs mindset.
Yeah, building a solid foundation seems to be the emerging priority.
Okay, so let's end with a thought for you, the listener, to chew on. Given this expected thinning of the herd among current unicorns, and this crucial difference the sources draw between perceived value and real sustainable value, when you look at a company that's achieved unicorn status today, what clues would you specifically look for? What signs, metrics, or characteristics would make you think, okay, this one might be a truly great company built for the long haul versus, maybe this is more of a papercorn whose valuation might not stand the test of time? What beyond that billion-dollar headline really tells the true story?